Very good afternoon to all, and welcome to all in this very important session on budget, post-budget interactive session of PhD Chamber of Commerce and Industry. As we have our esteemed guest with us, Ms. Pragya Sahai Saxena, Member Legislation and Systems, CBDT. Ms. V. Rama Matthew, Member Tax Policy, CBIC. Firstly, give her a big applause for providing a great budget for the 23-24, which is for the longer term growth trajectory of the Indian economy, as we are already fastest moving economy in the world economic system. And going forward, we will remain the fastest with a lot of inclusiveness in the growth and employment opportunities with the growing young population. So with these words, firstly, I request to all for the national anthem. Thank you. I request our Secretary General, Mr. Saurav Sanyal, for the opening of the session.
Thank you, Dr. Sharma. Good afternoon, ladies and gentlemen. Distinguished Srimati Pragya Saxena ji, Member LNS, Central Board of Direct Taxes, Ministry of Finance. Srimati V. Rama Matthew, Member Tax Policy, Central Board of Indirect Taxes and Customs, Ministry of Finance. Shri Raman Chopra, Joint Secretary, TPL2, Ministry of Finance. Srimati Surabhi Aluwalia, Principal Chief Commissioner of Income Tax, Media and Tax Policy and Official Spokesperson, CBDT. Srimati Limatullah Yaden, Joint Secretary, TPL2, Ministry of Finance. Our Senior Vice President, Shri Sanjeev Agarwal, PhD Chamber. Our Vice President, Shri Hemant Jain ji, PhD Chamber. Shri Anil Chopra, Chairman of the Direct Taxes Committee, PhD Chamber. Shri Bimal Jain, Chairman of the Indirect Taxes Committee, PhD Chamber. Dr. S.P. Sharma, Chief Economist and my colleague and DSG. Eminent dignitaries, friends from the media, ladies and gentlemen. A very good evening to all of you once again. PhD Chamber of Commerce congratulates Srimati Nirmala Sitharaman, the Honorable Finance Minister and the entire Finance Ministry, and all the distinguished delegates sitting on the dais here today for presenting a demand-sustaining, investment-inducing and growth-oriented Union Budget 2023-24. A round of applause, ladies and gentlemen. The budget, which has been announced at the time when India finds itself in the bright spot as the growth of the Indian economy is highest among the leading economies. Inflation has come down with the calibrated efforts of the government. Domestic demand is showing signs of recovery. The credit of MSME sector has shown around 30% growth. It is a very big step by the government, union government, of reducing tax slabs and furthering economic growth by increasing the budget for infrastructure. The government has presented an ambitious budget that is expected to have significant impact on almost all sectors, especially tourism, MSME and manufacturing, which had taken a very big hit during the pandemic in the last 3 years. A strong commitment to the capital expenditure, which will have a very positive effect for jobs creation, infrastructure development, and it will create tremendous investment opportunities, not only from the foreign investors, but also from the domestic market. This budget is also striving for inclusive growth, establishing an agriculture accelerator fund to nurture agri startups and promoting digital public infrastructure. In addition, the ambitious agriculture credit targets of up to 20 lakh crore by 2024, prioritizing the animal husbandry, the dairy and the fisheries are very, very significant and will boost the economy to the next level. 50 new airports, 157 nursing colleges, and many more 100 critical infrastructure projects will also be undertaken. The sustainable energy is the focus of our economy. In line with the PhD Chamber's recommendations, 30% of our demands, ladies and gentlemen, I would like to present here, has been accepted by the Union government on our recommendations. It is encouraging that the budget 23-24 has announced number of provisions for the education sector. National Digital Library for Children and Adolescents, 30 Skill India centers, new courses on the medical devices, nursing colleges, thrust on the Industry 4.0 training in artificial intelligence, robotics, and other new age courses are the call of the day, which has been taken care of in the new budget. The defense budget has been of a phenomenal nature, which 13% increase over the last year. Rupees 5.94 lakh crores is a remarkable budget for the defense sector, especially in the current strategic environment. This will ensure modernization and indigenization of the sector. Overall, the union budget is truly a demand sustaining, investment inducing and growth oriented union budget. Thank you, ladies and gentlemen.
Thank you, SG Saf. And budget is really a growth provoking budget, and we look forward that our growth becomes more and more sustainable and strong in the coming times. So with these words, I would like to invite our Senior Vice President, Mr. Sanjeev Agarwal, for the welcome remarks.
Shrimati Pragya Saxena, Member CBDT, Ministry of Finance. Shrimati V. Rama Matthew, Member Tax Policy, Central Board of Indirect Taxes and Customs, Ministry of Finance. Shri Raman Chopra, Joint Secretary, Ministry of Finance. Shrimati Surbhi Aluwalia, Principal Chief Commissioner of Income Tax. Shri Hemant Jain, Vice President, PhD Chamber. Shri Saurabh Sanyal, Secretary General, PhD Chamber. Distinguished dignitaries, eminent dignitaries, friends from media, ladies and gentlemen. Good evening. It is my great pleasure to welcome Pragya Saxena, Member, Central Board of Direct Taxes, Ministry of Finance, to PhD Chamber of Commerce and Industry for a post-budget session on implications of Union Budget 2023. Madam, we would like to congratulate you for an excellent budget, which addresses key issues and promotes the growth of the economy. In a very difficult period of recessionary global headwinds and lingering post-pandemic effects, it promotes consumption, providing a much needed boost to the middle class. The Union Budget has identified 7 priorities guiding India's Amrit Kal: inclusive development, reaching the last mile, infrastructure and investment, unleashing potential, green growth, youth power and financial sector. These priority areas will be herald the Amrit Kal and will lay the foundations for achieving the goal of becoming a developed economy by 2047. PSD CCI had been advocating for direct tax reforms, amongst other things, which have been accepted by this budget. We are very thankful to CBDT and Honorable Finance Minister for always being open to our suggestions and recommendations. We greatly appreciate the participatory relationship between the industry and the ministry that this government has enabled. The budget has received positive feedback from various stakeholders and is expected to bring about significant growth and development in the country. Apart from the budget reforms, Shri Nitin Gupta ji and Pragya Saxena ji have been leading internal reforms from within CBDT itself, including timely promotions and getting right work avenues for the officers and staff of the Income Tax Department and ensuring better taxpayer services. Under this leadership, CBDT issued a set of internal guidelines or standard operating procedures for Income Tax Department, assessing officers in order to simplify procedures and streamlining the faceless assessment system for the taxpayer. In short, his efforts are making CBDT future ready and citizen centric. Madam, the industry gathered here today would like to hear your inside thoughts on the Union Budget 2023. On behalf of PhD CCI and its members, I once again extend a warm welcome to you.
Thank you, Senior Vice President Shri Sanjeev Agarwal ji, for providing insights about the budget. Now I would like to invite our guest of honor, Ms. Pragya Sahai Saxena, Member Legislation and Systems, CBDT, for her remarks on the Union Budget 2023-24.
Thank you. Mr. Sanjeev Agarwal, Senior Vice President, PhD, Chamber of Commerce, Mr. Hemant Jain, Vice President, PhD Chamber of Commerce, Mr. Chopra, I think your Direct Taxes Committee Head, Mr. Sanyal, Mr. Jain, and I'm not able to see his name. And of course, my colleague, Mrs. Rama Matthews, and all the gentlemen and ladies and gentlemen present here. It's my privilege to be here. Unfortunately, Chairman CBDT was not well, so he has not been able to make it. So that's how I'm here. And at the beginning, I would like to thank PhD Chamber of Commerce for these beautiful remarks which they have given for the budget 23-24. That it is a very good budget, and most of your suggestions have been accepted by the government. I think that is a very heartening news that you are happy. At least some chamber is really happy. This time, I think we are getting very good reviews from everywhere. And as you all know, this is the first budget of Amrit Kaal, and this is directed towards taking Indian economy towards completely technology-driven economy, and it is balancing with respect to every aspect of life or every aspect of economy, and that is where we are, because everything which has been announced by the Honorable Finance Minister, that is being appreciated at various levels. Now, coming back to the direct tax proposals, which is my domain area, I would like to say a number of measures have been taken this year to take care of the middle class, to take care of the development growth of the economy, and various measures have been taken for rationalization of various tax provisions. This has been done with an aim to towards stabilization of the tax structure, tax system, and to maintain consistency in the tax system. At the same time, there is an effort to ensure that there is ease of compliance, burdens are reduced, and measures are being taken to ensure that the clarification is brought wherever needed so that we reduce litigation and ease of doing business is promoted. In that direction, and especially to give benefit to the people who are earning income and those who are in the low middle class or middle class, the personal income tax reforms have been carried out this year, and I think that has been well appreciated by everyone in the industry. I'll just touch upon the personal income tax changes which have been introduced by the Finance Bill 2023. That is the new scheme which was introduced by Finance Act, which was applicable from assessment year AY 21-22, that has been further rationalized, and the brackets have been broadened, as well as the basic lower exemption limit has also been increased from 2.5 lakh to 3 lakh. And now we have brackets. Instead of having 6 brackets, we have 5 brackets, and each bracket is of 3 lakh income bracket has been provided. The rates are 5%, 10%, 15%, 20%, and 30%. And this has also been extended to in addition to individuals and HUF, this has also been extended to AOP, BOI, and artificial juridical persons. And this is a default scheme. Why it is a default scheme? Because it is furtherance in the objective which government has started, that we are doing away with exemptions and deductions. In that direction we are moving. So this is this also makes it easy for you to file your return to analyze what is the tax liability you're going to have, and there's a substantial cut in the tax liability, which is going to be faced by the people who do not have very high income. Even those who are in higher bracket, they're also getting benefit. They're getting benefits in terms of the slabs which have been broadened, and also when you calculate surcharge on that, there is a uh, a reduction in that. So, and rebate which was available under section 87A, which was up to 5 lakh rupees in the old regime, that is now enhanced to 7 lakh rupees only with reference to the new scheme. Now, if you're in the new scheme and your total income does not exceed 7 lakh rupees, you will not be required to pay tax. You will get the rebate. And then surcharge, we have four slab rates of surcharge, which I will say that start from 50 lakh, 10%, 1 crore, up to from 1 crore to 2 crore, it is 15%, from 2 crore to 5 crore, it is 25%, and above that, it is 37%. So those who are in the new regime, for them, only 25 is the highest surcharge rate, which is applicable to them. So that is, and please remember, and when you are guiding your clients, please ensure that you guide them properly, that this 25% surcharge is available only in the new regime, not in the old regime. Old regime, the rates which were there, they continue. Now, there are a number of other measures which have also been taken. Them we can divide in various brackets, like some measures are there which are for socioeconomic development, some have been taken for giving relief to the taxpayers, some are there for rationalization of the provisions, and as I said, that rationalization provisions are of various types, that they are with the aim to reduce the litigation. They are also with the aim to reduce compliance burden on the taxpayers. So I'll touch upon a little bit on the measures which have been taken for socio-economic welfare. That is, the government has come out with a new scheme, that is Agnipath scheme 2022. So those Agniveers who are going to join that scheme, for them, whatever contribution they are making in that scheme and whatever contribution government is making, that will be allowed as a deduction to them, and the entire payout from the Seva Nidhi at the time when they quit, I think after 4 years, Raman, it's 4 years. So there, that will be not chargeable to tax in their hands. And then we have for micro and small enterprises also, we have taken some measures that they are not getting payments from the people to whom they are supplying their goods. They don't get payments on time. To ensure that they get payment, the tax laws have also provided that if they do not get the payment on time, within the time allowed under that act, they will not get that deduction on accrual basis. It will be given to them only on receipt basis. So then we have for startups also, some measures have been taken. The time for their incorporation has been extended by 1 more year. The time was up to 31/3/23. That has been extended to 31/3/24. And then we have taken many measures. I think if I go on with those that list, it will take a very long time. And my colleague who will be taking the technical session, he is here to answer all those technical issues. So I think I'll stop here. And thank you once again.
Thank you, ma'am. Thank you so much.
Thank you very much, ma'am. Now, I invite our next guest of honor, Ms. V. Rama Matthew, Member Tax Policy, CBIC.
Good afternoon, Shri Saurabh Sanyal, Shri Dr. S.P. Sharma, Dr. Mr. Sanjeev Agarwal, Mr. Anil Chopra, Mr. Vimal Jain, Mr. Hemant Jain, all the participants over here, and my esteemed colleague from CBDT over here, colleagues from CBDT over here. I will put some things in a very simple perspective. Essentially, what we have done on the indirect tax side are categorized into 3 broad categories. One is simplification and decriminalization of our legal processes. 2, structural changes to bring our both our rates and our tariff structure in line with the current industrial practices. And the 3rd is the changes in the law for facilitating taxpayers and providing ease of doing business. In all three, or in both on the customs side and on the GST side, these have been the broad categorization. On the GST side, obviously there will be no rate changes. That is always determined by the GST Council. But the process changes which have been put through the GST Council and approved, those laws have been, those amendments in the law have been brought in. So when we're talking about GST, where very specifically the law changes have been on facilitating taxpayers and the ease of doing business. Decriminalization of offenses. Actually, before I came inside, there was some conversation about decriminalization and providing compounding. We have both increased the base threshold for prosecution, and we have provided a compounding scheme. One of the things which we have kept very clear in all these amendments is that fake entities and plain fake invoicing are out of the ambit of this scheme, because that is essentially defrauding both the taxpayer, both the taxman and your clients, customers. So that is kept out of the ambit of this. But for the rest of the tax violations, whether there's a rate differential, whether there's a duty differential, etc., we have changed the thing. We have also rationalized the compounding scheme. Those of you who are familiar with compounding on the customs side, we have rationalized the rate structure. It used to be 100 to 150, we made it 55 to 100. Essentially made it much more attractive for somebody to compound an offense. A lot of changes have been, we have also introduced enabling provisions on online tax payment, on online activities, by tweaking the definition and enabling e-commerce. We have enabled e-commerce from the MSME and the very small sector. We have made changes in that law. We have also changed we have also clarified, I won't call it change, we have clarified the treatment of corporate social responsibility expenditure. My feedback so far is that the industry is not very happy with it. The only response I have to give to that is that we have brought our treatment of CSR in line with both the corporate and the income tax law. And I think we have to go with that. It cannot be that just we have one treatment separately for somewhere else. And this amendment is in fact clarificatory, because treatment of gifts under section 17 of the GST Act is already defined, that it is not includable as for taking of credit. We have just defined corporate social responsibility as a special category because there was so much dispute on, and there's so many varying interpretations, both from our side and from the industry side, on how it is supposed to be administered. The one final thing which we have done is we have actually provided an enabling provision where with consent we share information. We are sitting on a very huge information on a very huge database of information regarding the functioning of various industries and various sectors of the economy. And with your consent, for various purposes, there have been requests that we share certified, validated data for different purposes. So with consent, sharing of information has been enabled. On the customs side, there have been changes both in the law and in the tariff structure. The fundamental changes on the tariff side have been, first, the rationalization of the tariff structure itself, where we have deleted a large number of entries which no longer formed a part of international trade. In fact, there were about 153 odd entries which we took off. We also added a lot of new sectors to provide for nuanced classification, so and clear identification of goods, rather than we we found that there were a large number of commodities which went into the generic others category because of the tariff did not provide for those particular items. And it was also in order to align our tariff with the changes made by the WCO. There was also a certain alignment of the import and export tariff in one item, actually peanuts. The major areas which we touched upon are agricultural related sectors, telecom sectors, lab group diamonds, and textiles in the tariff amendments. We have also done a rationalization of the rate structure. Over the years, we had bloated to 21 different rates. We have now shrunk it down to 13. So because of that, there will be a minor tweaking, some 0.5% down, 1% up kind of shift in the rates. There were corrections made for inverted rates of duty. And the idea, there was an earlier commitment made before Parliament that there would be a periodic review of exemptions which are granted. It was supposed to be a 2-yearly exercise. We have taken a whole bunch of items out of this ambit, which are covered by international conventions and FTAs and other such regions where we do not have the liberty of changing the rate in any case, reviewing the exemption in any case. So therefore, we took those away from the ambit of this verification, and we have brought certain improvements in your dispute resolution mechanism. Fundamentally, these are the changes which we have made. I think my colleague Lima has come. She will be, when we go into the technical session, she'll be making a detailed presentation on the rates, etc. I will stop here and let the discussion progress from here. Thank you.
Thank you.
Thank you very much, ma'am. Now I invite our Chair of the Direct Taxes Committee, Mr. Anil K. Chopra, for his observations about the budget, particularly about the direct taxes proposals.
Ms. Pragya Sahai Saxena, Ms. Rama V. Matthew, Mr. Raman Chopra, Ms. Surbi Aluwalia, Ms. Limatullah Yadan, Mr. Sanjeev Agarwal, Mr. Hemant Jain, my colleague Bimal Jain, Mr. Saurabh Sanyal, Dr. S.P. Sharma, Pallavi Denodia, my co-chair, distinguished dignitaries, ladies and gentlemen. We have seen an excellent budget. That is our clear view. Excellence in the budget comes from an excellent team that has worked on it. The rationale has been explained. We understand it, we appreciate it. Various aspects have rightly been covered. What is the level of commitment that the team has, if I must say so, and if my information is correct? Ms. Saxena, there was a time she had an eye problem. And despite that, she saw things through and was working. That is exemplary commitment to duty and the interest of the nation. Some positives: the reduction in personal tax in new regime itself, because there is a stated policy. Exemptions, deductions, details are to be reduced, and we move into a new regime of reduced taxes. Surcharge reduction at the highest slab, giving substantial benefit to UHNIs. Enhancement of presumptive tax. This is again something along with surcharge at the highest rates and tax rationalization that our chamber has been seeking, and we appreciate it. Presumptive tax enhancement will also encourage voluntary tax compliance. It will help people come forward and thus widen the tax net. And there is simplification. You take your turnover, probably you have a GST return, you take your stated tax rate on the turnover, you file, smile, you pay and you go. There are no details, there are no issues which can lead to further difficulties. And moreover, it will release the department to focus on other complex and larger cases, which is what they wish to do. Proposals for startups, including extending the date of incorporation. This is certainly very welcome, as a change for carry forward and setting off of loss, making it similar to ATISC 10 instead of 7 years. And this is again a thrust to technology and knowledge-based sector, which is so dear to our leadership, and rightly so, because again, it will lead to employment, into India being in the forefront of the cutting edge. Enhancement of lease encashment limit, standard deduction, including for pensioners. Salaried class often say we get nothing. Well, fair enough, they deserved it, and I'm very happy this has been done. We did in our principal presentation, which we did in North Block, talk about the accumulation of appeals and the dire necessity to cut the backlog. A joint commissioner's appeals focusing on smaller appeals, releasing resources to cut the backlog, very welcome. And not only is it a question of resources being released to do the needful and prevent hardship to the citizen, but there is a huge sum of money stuck in litigation from the government's point of view also. So unless this is all decided, it is not going to move forward. The benefits are there. The interests of all sides have to be protected. In our chamber, we always urge our members, please comply with your tax responsibilities. This is a stated charter which we circulate to our members. Please comply. As far as sides are concerned, we are all citizens, we are all Indians, we are all on the same side. Somebody is an officer in some matter, somebody is on the other side of the table in another matter, but even in income tax, there is no classic two sides. It is not that there are two parties who are disputing with each other the way it would be so in a civil litigation. There have been procedural consequential changes also, many which may be unsung but have great benefit. So you have accrual of income in 1 year, taxable, the tax is deducted at source for certain reasons in another subsequent year by the deductor. Now there are provisions that you will get that credit by rectification of the assessment or intimation through due filing in the prescribed time and manner by the deductor. So these sort of consequential changes, and there are several, will certainly lead to more efficiency in what is done in the department, in the interest again of both sides. The law must be complied, the citizen must be prevented from hardship, and efficient operations. The finance minister herself spoke about this, that the portal has increased, the capacity to take returns and the huge number of returns that was filed have increased. The response time has decreased. I was shocked that I got some clients telling me we have filed the return and within a few days they've already got their intimation. So it is these aspects that make one very happy. These are heartening. They will move forward. That is the policy, and there are superb officers who are leading this ahead. There is no perfection. There is no perfection on our side also, if I may call it our side. That is the side of the taxpayer. But certainly improvements are happening. Amendment to Section 43B. Now your amounts are not paid. MSME Development Act says there is a certain prescribed period. So this will now be allowed on payment basis, and if someone is delaying your payment, this is an additional aspect which you could use to get collections. I can see my friend Vidur being very happy. He can tell his clients that, कि साहब आप दे दीजिए नहीं तो deduction नहीं मिलेगा. We and others from TPL here, we will send you a detailed memorandum. There are always points which we continue to seek, and it is again our genuine feeling that we are being heard. Once we are being heard, we were heard pre-budget. We believe we will be heard post-budget if we have a fair rational point in the best interest of the country and all concerned. If that is so, I have complete faith that we will be heard. Before I go to a few specific points where we feel some modification is needed, and it is, there are some things which we do touch. There must be improved training all around. Officers, taxpayers. Reassessment is a case in point. How many writs, how many matters, how Supreme Court moved in, and rightly so that justice could be done. But please take time for the law to be known both by the tax administrators as well as the taxpayers. Let them know what is to be done so that gaps are not left. Gaps can be unintentional, but the consequences are heavy for both sides. So training, lot of training. Please let there be due time and people to absorb and understand what is to be done, and then we take this forward. This is extremely important for us. Accountability. There is so much stress on grievance redressal. We appreciate it, but there are still gaps there. We can bring them to you. The only way this will get okay is accountability. We also talk of transparency. Why can't there be public lists that something was due in 6 months, it has not been done for 1 year? Then let that go up on the online, on the portal, that this is due for 1 year, it was due in 6 months. Will not that officer feel himself that this is now in the public arena? But then please see, you need to give justice to that taxpayer. He is going again and again and again, and his matter is not being done. All the usual old aspects, refund, appeal effect, and so on. Ma'am, very quickly, I will take 2 minutes because I'm sure you have heard this from some others also. Where we need some further modification, this is what you want, that whatever changes you are doing are finally effective. So loss, startup, 10 years from 7 years, we say, all right, for original shareholders, section 79, if 100% own, you will get this. But madam, 100%, one share changes hand is not 100%. One man dies, it's not 100%. Startups work on ESOPs, it's not 100%. Startups work on relationships and agreements with associates and foreign suppliers and others, it's not 100%. Maybe 75%. We would request you to look at it. Certain business reconstructions, you say 75% of the shareholders should continue. So we have an example of this. Please consider it. Presumptive tax, please increase it a little more. But then somewhere there is something, firms will get it. LLP is a firm, but LLP is not allowed to get presumptive tax. Please consider it. For professional, HUF is not allowed. Please consider it and increase the limit. Cash 5%. Ma'am, in the real practical world, in the field, 5% cash. It's not easy. We are talking small trader, small businessman. 5 को 10 please consider कर लें. I'm not saying 25 करिए, 50 करिए. जो आप ठीक समझें, please consider it. 5627B, you are going to hear this from various sources. Startups, they work on foreign investment. Foreign investor, unrelated party. Fund registered with his regulatory authority. Maybe a fund registered with regulatory authority here. But on the basis of valuation, his investment may be challenged. What are the skills of the person who is going to see valuation? Is this really ease of business? Please think about it. And ma'am, the whole model globally is investment. And the investment does not go by normal rules of valuation when it comes to startups. Even Amazon had huge losses for many years, but its value kept going up. You see how, they see footfalls, they see eyeballs, they see future earning capacity. There are so many factors. It's not going to be NAV. How do I explain it? And then how do I explain to the AO? So either you please make a very enlightened, informed valuation cell, which is committed to you to be fair and have genuine global skills and expertise for such valuations. In any case, ma'am, why will an unrelated party give me excess money? Isko please consider kare.
Sir, I request for.
I need
concluding.
2 seconds, yeah. Capital gains, ma'am, 10 crores. Again, you are going to hear this. I understand. My point is, you restricted to one house. I give an example, दो भाई हैं, लड़ाई हो गई. They have to buy 2 houses. 20 करोड़ के घर में रहते थे, 21 करोड़ के 10.5 के 2 घर लेते हैं, मगर एक घर है. उनकी फैमिली के ऊपर एक छत है. Let them have it ना मैम. एक आदमी एक शहर में काम करता है, वहां पे बेच के, क्योंकि अब उसकी नौकरी दूसरे मेट्रोपॉलिटन में है, वहां जाता है, या बिजनेस वहां जाता है, तो उसको करने दीजिए. वैसे तो सिंगापुर में कैपिटल गेन्स पे भी टैक्स नहीं है. प्लीज कंसिडर इट. LRS 20%. I may transfer from my bank to another bank for expenses, not even for investment. Why 20%? And so on, man. My secretary of my committee is saying I should pause for a moment, but ma'am, we will send you the memorandum, and knowing you, I'm sure it will get all due consideration. Thank you very much.
Thank you very much, sir. We will definitely send the memorandum. And now I invite our chair, Indirect Taxes Committee, Mr. Bimal Jain, for his observations about the indirect tax proposals.
Madam V. Rama Matthew, member CBIC. Madam Pragya, member CBDT. Senior CBDT officials and Limatullah ma'am from CBIC. Our senior VP Sanjeev ji, VP Haman ji, my chair from Direct Tax Anil ji, Saurabh ji, Dr. Sharma, ladies and gentlemen, good evening to all of you. I will come straightforward from GST perspective, ma'am. GST undoubtedly a biggest structural reform in the country. Multiplicity of 17 indirect taxes, 23 cess merging into one basket. Cascading gone, double taxation gone. India become one nation, one tax, one market. Biggest advantage. Economic survey saying from 70 lakh we started in 2017, we are now 1 crore 40 lakh. Our collection was 90,000 crore rupees per month, but now we are on an average 1.5 lakh crore, and we are competing with direct taxes now. We are 53% of total tax revenue. So CBIC is doing much better. On a lighter note, From custom perspective, I must compliment that Honorable Finance Minister has said custom proposal, basic custom duty is decreased from 21% to 13% for raw material and components. Boosting export, reducing imbalance of trade, adding domestic manufacturing, make in India, Atmanirbhar Bharat, and domestic value addition. What could be the best example for the youth sitting here? 5.8 crore mobile manufactured in 2014. Do you know what is the number today? 31 crore mobile manufactured in India. So we are exporting mobile. So Madam has taken many steps to reduce basic custom duty on raw material and component only for domestic manufacturing. Value addition, added advantage. Coming back to GST once again, because time is only 10 minutes for me, so I just want to draw some attention, member CBIC sitting here, so I can draw those pointers which is coming out from the trade and our observation. And it is constructive feedback, no criticism. Ma'am, first point, and first and foremost, corporate social responsibility. You have picked up this particular issue. Now it is barred in GST, no credit available. But this section 17, subsection 5, clause FA, it is prospective. So a clarity needed for the past period. Of course, I know income tax, it was barred, explanation A, section 37 of IT Act. But from GST perspective, first time it got restricted by way of insertion of new section, that is prospective section. So what happened for the past period? We want little clarity on that CSR. And CSR is statutory obligation. Condition to my business. Okay, it is conscious call that credit is not available, will not be available. But what happened for the past period? coming back to the second point, ma'am. Pre-transaction merchant trading, when I'm supplying from Korea to US, I see sell, and when I'm supplying goods within custom bonded warehouse, para 7 and para 8 of schedule 3. It was amended from 1st February 2019. Now it is retrospectively and laudable one from July 1, 2017. But you have made one clause therein. There are two kind of taxpayer, ma'am. One who is a genuine and honest, and he comes forward and pays the tax. And one taxpayer always litigate the matter. So those who are litigating the matter, they got advantage. That for them, no GST because schedule 3 item. But those who have paid the tax, you are specifically saying they will not be given refund. This transaction is not taxable per se. If he has paid the tax, he must be refunded. Only thing, incidents should not be passed on. That should have been looked into. Correlated provision under section 17, subsection 3 for exempted supply, you have included supply of goods within custom bonded warehouse for reversal of common ITC. Now, just I'm giving one food for thought, ma'am, maybe some transaction of custom bonded warehouse sale I've done in 2020. I treated the same, no GST leviable. Now, this is the part of exempt supplies and reversal of common ITC required, which I haven't done it. So I need clarity. Okay, way forward, I need to reverse my common ITC on para 8A of schedule 3. But for the past period transaction, do I require to reverse? That is the point I wanted to draw your attention. Coming back to the third point, I was referring 43B. In technical session, I will touch base this particular 43B, how much beneficial or not, but not here. But in GST perspective, section 16, subsection 2, proviso 2 and proviso 3, if recipient fails to pay within 180 days, then buyer has to reverse credit along with interest. Now, this interest provision, section 50, subsection 1, CGST Act, if I've availed the credit but not utilized, do I again require to pay interest? Because 50 subsection 1 is saying interest is leviable only when credit is utilized. So if I've availed the credit and I'm having enough credit with me, and then I'm reversing as a recipient, not utilized, then interest implication should not come. When I'm talking about interest, one prominent suggestion, this is not the budget proposal, but the prominent suggestion, madam. We are from SME and MSME, PSG known for that. In GST, we have to pay on accrual basis. Madam, if I delay in payment of GST, rate of interest is 18% per annum. 18%. And we all are talking about we have to support SME and MSME. Whereas when we get delayed in getting our own refund, interest rate is 6%. So parity is somewhat, I do understand there may be some region for that, but this parity must be at par. See what happened today, I'm a small sector having only 30 lakh rupees turnover, I have taken registration. First of all, I'm not getting paid by my customer, and secondly, I have to pay on accrual basis. If I don't pay 18%, means I have to take bank loan for 12% and pay the GST liability. 18% looks as on date with the current market situation, little tight. And let me compliment and appreciate also. These are the suggestions because you are in a hurry and 10 minutes is only for me. Decriminalization, we must compliment CBIC and CBDT and Finance Ministry, the kind of budget they have presented. See, we are targeting 6.5% growth, GDP growth. We are targeting 9.1% growth in service sector. We are targeting 4.1% growth for the industrial and manufacturing. We are targeting 3.5% growth for agriculture allied. And this is the first budget of Amrit Kal. Madam, rest assured, $3.5 trillion economy now, and definitely by 2047, India at 100, will be $35 trillion economy. Some of the suggestion. Of course, we are the partner to the nation growth and development. At PSD, we can complement you, and we are partnering and soldiering your responsibility. We will make sure that the initiative of every one of us, dream of every one of us will definitely come through as a success. Last 2-3 point, ma'am. In GST, what we were expecting, some kind of roadmap for GST tribunal. Of course, I know 49 GST council meeting going to take up this GST tribunal issue, but pending for a long time, and all the litigation are going to High Court. First point. Second point, which I want to draw for you, it's GST rate rationalization. But before I pick up from before you, yesterday I heard a respected revenue secretary has said that immediately there is no rate rationalization, 5%, 12%, 18%, 28%. So maybe way forward. But the last and foremost cross charge in GST. It is such an issue that we are not getting any clarity at all for the cross charge. And we all are looking for the answer for the cross charge. So maybe these are the initial thought within 10 minutes, because I need to finish up within 10 minutes, but definitely in technical session, madam is there. So we will touch base those pointers from trade side, and we will look forward and ensuring you from PSD CCI, we will always be soldiering the responsibility and see India grow, and 2047 we will be $35 trillion economy. Thank you very much.
Thank you very much, sir. Now I invite our Vice President Hemant Jain for the vote of thanks.
Good evening, friends. Srimati Pragya Sahai Saxena, Member CBDT. Srimati V. Rama Matthews, Member Tax Policy and CBI, Central Board of Indirect Taxes and Customs, Ministry of Finance. Mr. Raman Chopra, Joint Secretary, TPL3. Mrs. Surbhi Ahluwalia, Mrs. Lumitula Yadav, Shri Sanjeev Agarwal ji, Senior VP, PhD CCI, Mr. Shri Anil Chopra ji, Chairman, Direct Tax Committee, PhD CCI, Bimal Jain ji, Chairman, Indirect Tax Committee, PhD CCI, Shri Saurabh Sanyal ji, Dr. S.P. Sharma ji, eminent dignitaries, friends from media, and ladies and gentlemen. A very, very good evening to all. Thank you for being patient with us. We are maybe 10-15 minutes delayed, but it was a very, very important session. I extend a very hearty vote of thanks to Srimati Pragya Sahai Saxena, member of CBDT, and Srimati Veer Rama Matthew, member of CBI, Central Board of Indirect Taxes and Customs, Ministry of Finance. It is good to see that both the ladies are in charge, and I'm sure when ladies are in charge, things are more rationally taken and progressively taken. Thank you for sparing your valuable time. I know you have a very, very busy schedule and taking your time and coming and seeing us here. We are indeed grateful to you for joining us here today and enlightening us with your thoughts. Friends, we are all aware that making a union budget is the most arduous task, and the government has been taking many initiatives to streamline the tax administration and incorporating provisions to create an atmosphere which is conducive to investments by removing bottlenecks to growth. As always, there will be some expectation met and some not. But we are sure with the open interaction like these help create better mutual understanding between the authorities and SSCs. I think it is the first time that we had, before the budget, we had an interaction with the FM. We had the interaction with the Chief Economic Advisor in the Finance Ministry. We had a very lengthy interaction with the Revenue Secretary and the CBD Chairman. So this kind of interaction which we had post-budget, now we're having it pre-budget. I think it went a long way when we went through the budget session in the PG chambers. I think 30% of our suggestions were taken into account. So we thank you for really taking note of all our suggestions there. The Union Budget 2023 presented by Honorable Finance Minister is bold and offers not only a direction for growth, but also a strong intent for reforms. The Indian economy has undergone transformative process of new age reforms in last 8 years. These diverse policies converge towards improving the economy, overall efficiency, and lifting its potential growth. The budget provides a great direction towards stability, strength, long-term economic growth to build Atmanirbhar Bharat. A direct tax recommendation in the budget of 2023 are intended to ensure continuity and stability. It has also put some money in the hands of middle class, which will surely be a growth booster. Rationalize numerous rules to lessen the cost compliance, encourage entrepreneurial spirit, and give resident tax some relief. Ma'am, we have in our chamber, normally we have around 50 or 60 ambassadors who come in a year. We had with us a German ambassador. Normally we think Germany is the leading edge technology. That was there. It was the ambassador, His Excellency, the ambassador of Germany. He said that the work what we are doing in technology in India is, I think Germany is at least half a decade behind India. It was a big compliment coming from His Excellency for Germany, because normally we believe that Germany is way ahead in technology and systems. So when it comes to IT, it was his statement that at least India is at least not, if not more, at least 5 years ahead of Germany. The chamber will be submitting its suggestion in form of a post-budget memorandum for consideration by authorities. We would request one thing, it's a personal request, ma'am, that we will give suggestions and I'm sure you will consider them. But we'll also request for a meeting post this, because a lot of suggestions need to be deliberated. So whenever you have time and availability of time, we would our team from the Direct Tax Committee and from the Direct Tax Committee would like to physically meet you and maybe explain you the final details of the event. Thank you, ma'am. Thank you for your time.
Thank you very much, sir. And now I request our Senior Vice President, Shri Sanjeev Agarwal ji, to present a plant and memento to Ms. Pragya Sahai Saxena, Member, Legislation and Systems, CBDT. I request again our Senior Vice President Shri Sanjeev Agarwal ji to present a plant and memento to Ms. V. Rama Matthew, Member, Tax Policy, CBIC. Thank you very much. And with the request of thank you very much, sirs, for facilitating our gather. And so we wind this session, and we request all the participants for the next session, which is a technical session, to be addressed by Shri Raman Chopra ji and Limitullah Ma'am Limitullah Yadin for the technical aspects of the direct taxes and indirect taxes. And thank you very much. So we are just starting the next session. Please pay attention. Hello, guys. Hello.
Friends, Monica, can you request people who are outside? They can bring their tea in. Most welcome. Let's start, please. Those who are not in, but then the tea can come. Yes, absolutely. Equity. What I think. So may I request you to start, please, Mr.
I can start.
Yes, I think when you start, then if there's someone outside,
Absolutely,
they will come
absolutely.
in.
We've had two speakers already on the direct tax portion of the Union Budget 2023. I am not sure if I need to actually go into the details of the proposals which have been brought. There are about 58 proposals in total which have been brought into the finance bill this time, and which are indicative of certain policy thrusts of the government. The basic policy of the department in the last 3-4 years has been non-intrusive tax compliance. Non-intrusive voluntary tax compliance is the basic thrust of the government. The result of non-intrusive tax policy is that we end up in lesser litigation. So that is the policy of the government. Each and every budget in the last 3-4 years has tried to address this issue. In the last year's budget also, there were critical pointers towards this direction, and the updated return was a critical pointer in this direction. It's not been pointed out earlier, but we've already received 10 lakh updated returns till date in a period of less than 6 months. Otherwise, what would have happened? Otherwise, department would have initiated 148, reopened proceedings. It would have been litigated. About 5 lakh appeals would have been generated. And the end product was department may not have got the tax. So where I start from is, the thrust of the policy of the government has always been voluntary tax compliance. Wherever globally voluntary tax compliance is good, tax collection is good. The reduction of tax rates over the years, starting from 1969, we were at 97%. We've come down to an effective rate of 10% for a 15 lakh earning individual. The effective rate of tax at 15 lakhs is only 10%. Nowhere globally, when my income corresponding to my per capita income, national income, is so many times, the rate is so low. You can be critical of the tax department that our rates are high. Constantly it is being pushed that we were at 42%. We've brought that to 39. That rate has also been brought down. But fundamentally at the lower slabs, where the majority of the country lies, the new personal tax regime, as we all know it, it was introduced about a couple of years back. Unfortunately, due to the rate slabs and all, it was unable to attract too many people. Our exercise in the budget in the last 2 months was fundamentally repeated iterations on the personal income tax slabs, and trying to reach to a solution where each and every income slab benefits. There has been coverage in the press which has not been very fair. I must at the outset point this out. There were coverages which said that a 10 lakh income, if he makes an investment of 4 lakhs, the old slab is better. But be fair to us, a 10 lakh income earner would hardly get a investment of 4 lakhs. It is unreasonable. Our slabs are based on average deduction claim on the basis of actual data of returns across segments. And based on those data, our analysis says that each and every person, average person in every slab will benefit. And the proof of the pudding is in the eating. You can check out 100 people available here, that how many people are taking deduction more than 2 lakhs. At a 15 lakh income level, the break-even point, what they call it, is 3,75,000. That means I need to invest 3,75,000 if my tax in the old scheme and the new scheme is identical. But that is not a break-even point. Suppose I have 3,70,000 in my hand and don't pay any tax. Is it equivalent to keeping 3,70,000 locked up for 5 years? Is it the same? It is certainly not the same. That is why I see the new scheme is going to push a lot more people towards the new scheme. And that is the precise reason that we've made it a default scheme. अभी से पहले जो स्कीम थी 5 लाख से नीचे 0 टैक्स था सबके लिए. But people did not shift. That was a pure lethargy position, that जो मेरा income tax अगर newly compute हो रहा है, old regime में हो रहा है, new regime में हो रहा है, I might as well stay there. A salaried employee less than 5 years, 5 lakh income was not shifting. Now we made him a default position in the old scheme, in the new scheme, and it goes up to 7 lakhs. So the fundamental change in the budget, the most talked about change in the budget is personal income tax. The thrust of the department is lesser litigation. Lesser litigation arises from lesser provisions in the income tax being applicable to any assessee. And how are lesser provisions applicable to any assessee? It is through lesser deductions, exemptions being claimed by you. So that is where the rationale of the new scheme comes in. I want to cut out about 100 pages of the act, that these will not apply to you. You come to my new scheme, pay the same tax. You don't need to read 100 pages of this big book. So that is how we come to the new scheme. There are a number of other provisions. Some are talked about, some are not talked about. Some will raise questions, some will just go just as a procedural element. We've made a couple of changes in the capital gains environment. There is a segment, there is an instrument. There was a very interesting instrument, the market linked debenture, MLD. It's been raised in a couple of fora. It appears it is a debt actually. It is a debt debenture which I buy. The return of the debenture is based on what is the level of NSE or BSE after 13 months. That is what the instrument is. Me and you, salaried people, are paying 30% tax. But a high net worth individual who buys such an instrument of 50 lakhs, a debenture of 50 lakhs, would earn interest at a specific rate on such instrument and pay tax at 10% on such instrument. It was grossly unfair. Unfair to people who were earning lesser and paying tax at a higher rate. That has been brought at par with the normal applicable rate of short-term capital gains. Another change of 10 crores. A speaker referred to this 10 crores being a harsh limit. On a perspective of a country like India, the investment in a residential house of more than 10 crores is prevalent mostly in metros, and that also of less than 2% of the people can afford a house more than 10 crores. And 10 crores, why the limit was brought to 10 crores? There were incidents which were being reported that gains of more than 200 crores were being parked into residential properties, residential farmhouses. That is the type, I am here just to give you an insight on the amendments. You are already aware of the amendments. I'm just trying to highlight some provisions as to why those provisions were brought in. 10 crores is a fairly reasonable limit according to us. It may appear lesser for some, but it is a reasonable limit. Then online gaming, not raised presently across the discussions. But there is a substantive change to online gaming in the budget, both in the taxability of the income as well as the TDS on that income. The change is for good for the assessee, the deductor. It is good for the department also. The gaming industry is basically an online industry having wallets of thousands of game players. They are wanting to comply. But the problem was that they were not even sure what was to be done. So now the concept of net winnings has been brought in. That either you withdraw from that wallet or the net winnings at the end of 1 year. On that amount, the tax will be deductible, and on that amount, the income will be charged in your hands. It has been separated from section 194B. A separate section has been carved out as 194BA, which is for the benefit of the gamers also. Here also, there were reports that it was being misused, as winnings up to 9,900 were continuously being pumped into wallets of certain people. So again, that went scot-free, not beyond the eyes of the department. The threshold has been lowered to nil, but the benefit has been given that an aggregate net winnings shall be taken. Because what was being suggested was that I win on 1 day, then lose next day, then win in a single sitting I can have 10 winnings and 10 losses, 8 losses. So here a stakeholder perspective has been taken on board, and post that a specific provision has come in. Section 5627B. There also a lot of discussion. While walking up, I saw a poster of some startup person also giving a lecture sometime in the chamber. Startups have nothing to fear. Startups per se were excluded from the application of 5627B, angel tax as it was called. No reason to be called angel tax. I don't know why they called it angel tax. But startups were already excluded in March 2019 from the applicability of this provision. Not only were they excluded, all additions made and all appeals pending were directed to be decided in accordance with the circular issued in March 2019. That is the notification. So startups, the change this year is only that parity had been brought with the resident, between the resident and the non-resident. The provision, most of us are aware, was an anti-avoidance provision, a very clean provision that there is no gift tax, but I want to pass some money to Anil sir. What he does is he opens a company in the name of his wife and asks me to subscribe the shares worth 1 rupee at 1,000 rupees. De facto, I have passed on 999 rupees to him. It needs to be taxed in the hands of the recipient company. That is what the provision says. In the absence of a non-resident to whom this provision was applicable, I can certainly ask my brother in the UAE to enter into the same transaction. I can send it to my brother and he sends it. The whole provision was defeated. So that is the rationale of the provision. The provisional is a fair provision. It is needed to be on the statute. But the concerns raised by startups or other entities are presently not taking into account that the department and CBDT and DPIIT are on board and they've already excluded startups. We've already excluded venture capital funds from applicability of this provision. We've already also have a subclause B in the explanation which clearly says that any class of persons can be notified by the CBDT to be excluded from this provision. The concern is that a registered venture capital undertaking which is under the regulations of a foreign entity may end up paying tax in India. But that is to be examined on a case-to-case basis. They can come up with the proposal to the CBDT, and the CBDT is always open to identify and notify such institutional investors. Third concern raised there was with reference to FEMA. FEMA says that I cannot have my valuation lesser than X. I am in my tax law saying you cannot have your valuation in excess of X. So apparently they are at cross purposes. Apparently they are at cross purposes. Fine. My rule 11 UA, when it was brought on the statute, was taking into account a resident investor. We have to re-evaluate that rule. We have to re-prescribe it. We will certainly re-prescribe it, taking into account the concerns with reference to FEMA. So the angel tax provision per se, I don't think it is going to create too much of a concern for anybody. Where there is round tripping, certainly there is a need for concern and they should be concerned. I'm okay with that. 43B. 43B, it was already on the MSME statute that I cannot give any amount to, if I have some payment to be made to the MSME under the MSME Act, it has to be made within 45 days. So that has been brought on board. The tax 43B has been amended so as to align itself to the MSME Act. Concerns about that also were raised, that sometimes there is an agreement between the MSME of 100 days to receive money because he is in a smaller position and the bigger entity who is giving him contracts may want a further time credit limit. But I'm sorry, the Act does not permit, and MSME, the line ministry has actually worked on it and said 45 days with agreement is the position. So that is where we come from. Wholly we've tried to rationalize the provisions, plug gaps, appellate functions. Sir also raised appellate functions. Appellate functions, presently we are at more than 5 lakh pending appeals. They need to be disposed of somehow. And we are working towards it. This is the first step. FM in fact said 2 things in our speech on the Joint Commissioner appeals, that we will redeploy 100 Joint Commissioner appeals, and we will also make a limited selection for scrutiny so that the resulting appeals from the current scrutiny selection is also less. So we are there to address issues. A large number of appeals are occurring from 143(1) cases. 143(1) cases, TDS, CPC, TDS cases, those can directly go to a Joint Commissioner. Those who are aware would know that the present faceless regime, the assessment unit is headed by a Joint Commissioner. Unfortunately, when the assessment unit is formulating an order, the officer is a co-signatory to that officer. Order is of the level of a Joint Commissioner only. Therefore, primarily faceless appeals of assessment would not go to the Joint Commissioner. So these appeals would be pre-faceless era, smaller appeals, and appeals concerning 143(1) and TDS appeals, rectification appeals. Those would be quickly disposed of by the Joint Commissioners. I am confident that about 50,000 odd appeals would be easily disposed in this manner. There are a number of provisions. The TDS provision somebody was praising was, actually it was a fundamental issue. That मेरा TDS बाद में कट जाता है और मैं उस इनकम को दिखा भी चुका हूं, मैं इनकम भी शो कर चुका हूं, टैक्स भी शो कर चुका हूं, तो क्या करूं उस TDS का? So a provision has been laid, a subsection 20 has been entered in section 155, which clearly says आप application दीजिए, आपको refund मिलेगा. But department has been so positive in actually addressing ease of business issues on this account. A practical issue has been addressed, firmly addressed on that. Then applicability of treaty rates on remittances abroad, that has also been brought at 196A. So across the board, you see the budget, across the board, all segments have been taken care of. Section 1046A, if somebody would be aware, that is the fundamental section we brought in this time. एक सुप्रीम कोर्ट का डिसीजन आया था चैरिटेबल ऑर्गेनाइजेशंस के बारे में कि जो कमर्शियल काम कर रहे हैं उनकी इनकम टैक्सेबल हो जाएगी. Regulatory authorities set up under the act very often perform such works. So they would end up not being able to get 1046 or 11 or 12 regime. That is the reason we brought a specific section for them. So I'll be open to questions. That is my take on it. The budget per se has put forth the government's policy, and on the whole, the feedback on the budget is very good. And I am happy that the Chamber of Commerce, PhD Chamber of Commerce has also acknowledged this fact that we've listened to them in part though. Thank you so much.
सर बजट तो आप बनाते हैं, पाठ भी सुना तो अच्छा लगता है और सुनेंगे और भी अच्छा लगेगा. But we will convince you, and we will have good rationale for any suggestion we make. We also believe in restricting our suggestions. So because there is otherwise too much on your plate, we will do that. But we certainly appreciate the way you have very nicely told the background of various aspects. We are enlightened. We may have our thoughts. Several points we are with you. We appreciate it. I said so. Some points we believe we need to place our aspects, and then all of you would consider what needs to be done. And but we are certainly enlightened by what you have very fairly told us. We have two parts now, and one is that my co-chair is also to share some thoughts, but we also have our guest here, an indirect tax, and Bimal has rightly pointed out that after Raman Chopra ji, she should now speak, and then Pallavi would also take some time to share some thoughts, and I hope you will all be very kind to be with us to listen to her too. What I should have done in the beginning, and perhaps it was touched a little, just in the interest of time, we have not elaborated much on this, but clearly Raman Chopra ji is a PCIT, Principal Commissioner Income Tax. Joint Secretary TPL is the way he is designated, and TPL are the people who are making the laws and dealing with the legal aspects in direct tax. And there is a TRU, etc. in CBIC, which are doing something similar. Clearly, it is the best and the brightest who the government has been using. And we are seeing that for such positions, and we are seeing that through what is being now brought on the statute and proposed. We do appreciate all of them being here, and I do thank him very sincerely for being here with us. Thank you very much, sir. I'll now hand over to Bimal, who chairs the Indirect Tax Committee, as you know.
I will not take much time just to appreciate like Joint Secretary TRU from direct tax side, the learned Madam Lima ji sitting on my right hand side. They are the person who listen to our voice. They are the person who really make those necessary changes. So they are the backbone. If you see any change which is coming out because of them, so they deserve a big round of appreciation from all of us together. So Lima ma'am is very dynamic, very receptive. Whenever we have approached to her, she is listening to our concern, and way forward, of course, we will see the similar kind of vibration. So without taking much time, a request to Lima ma'am for her remarks on indirect taxes changes in union budget.
Thank you for inviting me. Mr. Anil Kumar Chopra, Chair, Mr. Bimal Jain, Chair, my co-chairs, Pallavi, Raman and Saurabh, and ladies and gentlemen, thank you for inviting me. But if you see the news or the media, you would think as if the indirect tax did not do much work because we are not in the news. So in fact, I think it's a good thing that the changes that has been made has gone down well. And I think it is mostly understood by people sitting here. The kind of changes is so well understood that I don't think there were any room for doubt. And as member tax policy would have already run through it in brief, just 2 minutes. Our thrust of the budget was simplification of rate structure. That was also to ease compliance burden and for ease of doing business. So reducing rates, BCD rates, which over the years had, sort of dispersed, to compress them to 13 was also not an easy task, but we have done, and we hope that in the coming years, we would try to compress it more. Then the other was, I think the broad theme was Atmanirbhar Bharat. So under that Atmanirbhar Bharat, if you see the kind of changes that we have done, it is either to augment raw materials for our domestic industry. It is to sort of promote manufacturing in India by sort of correcting inverted duty structure. And of course, deepening value addition, like you would see that earlier we had given parts of mobile phones. Now we are also encouraging that those parts should not be imported, but should be made in India. So you would have seen a lot of changes where we are now giving custom duty exemption to sub parts of those intermediate parts or intermediate goods. So we are not import dependent on such commodities. And I don't think we have made quite a lot of changes in the law, except I think as ma'am said, we had created some new tariff lines to meet the needs of the growing industry, particularly in, say, telecom or lab-grown diamonds, which is a rising segment. And of course, in chemicals, fertilizers. So that is also was the request of the trade, and the together with the line ministries, we have sat and we have worked on it. Apart from that, the changes in Customs Duty Act or CTA was just sort of more to amplify the intention of the government. So no, I don't think there were any adverse changes that were made that has been not well received, that sort of adversely impacted the trade. So I wouldn't take much time. In fact, I would like to listen to you to see that if there were some things that was left unsaid or undone, I think that would perhaps be better. Thank you.
Palvi Dinodia, please co-chair direct tax, and she will share some of her thoughts on the budget.
So thank you so much, and thank you, ma'am, for keeping it ultra short. But looking at time, I would maybe open up the floor, because I know a lot of us want to ask Raman sir and ma'am lots of questions. So I think budget everybody's read, so maybe I'll pass. Sir. Thank you.
Saurabh, if you want to say something.
I think we can do it an open session only. We can just continue.
So we are open for question answers. Yes,
I
please.
could take the first question, Mr. Raman Chopra. 5627B we've already covered, and that's been from day one. The another section in the same part, 56, was also about the InvITs being taxed.
Yes.
And the capital amount being taxed on withdrawal. I think that has created some confusion for the industry whenever I've been speaking to people. So maybe it was the embassy, maybe it was one of the InvITs that was being taxed. So what we understand is that's only a deferral. It's not about recharacterization, whether from capital gain to income from other sources.
No.
What I read about this and when I read this is that whenever you withdraw, either if it's in the nature of interest, dividend or rental, it's taxed in the natural head because of pass through. But what is also being mentioned or stated is that if you withdraw or if it is paid out as a capital back, that's also being taxed. I think that's something that I have lost, because what will happen is if I given a capital, the amount coming back to me will reduce my cost. End of the day, the tax will be deferred later, but are we talking about being taxed as and when I receive it? I think that's something that does not go well.
On the InvIT issue, what was happening fundamentally, I'll just try to explain what was happening and
Ji.
then explain the provision in the context of what was happening.
Ji.
I bought a unit in Embassy for 10 lakhs. One unit I bought, and Embassy has further invested into some infrastructure project. Embassy is receiving some amount and then passing that amount to me. The problem is that Embassy is giving me rupees 100. That is in the same nature as what was received in the hands of Embassy. Embassy receives dividend, interest, and debt repayment in the hands of Embassy or REIT. That amount in the same proportion has been passed on to me and classified as that 100 rupees has been classified as dividend, interest, and debt repayment received by Embassy. It is not debt repayment to me. Just take it very clearly. It is not debt repayment to me. My unit of rupees 1 lakh in Embassy, that value of that unit does not change. Once that amount is not changing, my investment in Embassy is not changing. Whatever I get from Embassy should be taxed. I think we all agree on that. Whatever we but it was cleverly being played that dividend received is taxable, interest received is taxable, but this debt amount is not since it is not taxed there, because there it was a debt repayment, even though if it has been passed on to me, it is not taxable in my hands. That has been prevented. Any unearned increase, gain from Embassy to me is required to be taxed in my hands till it does not recede my debt of value of my unit in Embassy. If that value of that unit is reduced, it is not taxed. If the value of that unit is reduced, it is required to be taxed. My take on that is very simple. The provision is simple. It is brought in to counter such avoidance and evasion processes and procedures which have been placed by some REITs. It will address their problem, and as we move forward, the position will be clearer.
Sir,
That's my
may
take
I-
on it.
may I take this one step forward?
Sure, sure.
With the permission of the chair. Can I?
Please.
Sir, I have two options. I can invest in the share of REIT as a company. I can invest in REIT as a co-shareholder, assuming REIT is REIT Private Limited, and here it is just REIT. Sir, whatever.
No, there is
I get-
no concept of REIT private limited per se.
Sir,
What we have brought in currently is with reference to REITs only. I think we should restrict ourselves to REITs only, which is a business trust
Sir,
and nothing else.
in the business trust, sir, if I have invested money to buy a flat or the rights to a flat as what you are
Okay,
allocating,
okay.
because they have allocated X percentage of a flat.
Okay,
I did not have the money to buy the full flat, so they've allocated X percentage. Now, this X percentage, anything which I gain above the cost of the X percentage should be treated as a capital gain. And that is what was being done in all other assets. Even today in Gurgaon, I can purchase a flat on a share ownership basis. And it is only taxed as capital gain if I have repaid money over the percentage price. My humble submission is, this was the concept which was accepted in the income tax law, and there is no reason to make a conceptual change in this asset as compared to any other asset.
what is being transferred to me is not a capital appreciation on my investment. It is not a capital appreciation. Just get me clear. It is not a capital appreciation on my investment which is being passed on. My capital gain occurs as and when I transfer this capital asset to somebody else. That is the concept of capital gains. Capital gains cannot arise and shall not arise as long as there is no transfer. So that is why, to plug that loophole, get me clear, to plug that loophole, since there is 56 to 7 says, 56 to 10 presently says that if I give him anything more than 50,000 in his hands, it is taxable in his hands. But why should it be different when I am a REIT and he is my unit holder? Take it as simple as that. Just
sir,
take
we
the
will-
provision as simple as
So
that.
the chamber will
Sure,
get some
sure,
of the
sure,
papers and then
absolutely.
submit it.
Sure.
A clear clarification.
Sure,
to
sure,
you.
sure.
And then you
Absolutely,
may
sir.
act.
Absolutely, sir.
Anyone else want to?
But may I want 1 minute on totally another point.
Sure, sure. Hanji bataye.
So you would agree with me, and generally it does so happen, that different departments of the government work in tandem. For example, it is a stated policy of the government to increase employment through SME. It is a stated policy to help SMEs to grow. Therefore, the turnover limit has been raised to 250 crores for the eligible of being counted as an SME under the DIPP laws. It is 250 crores plus exports. On the other hand, here, even for section 79, where you are allowing new owners to come in together with the old owners continuing, you are restricted it to 100 crores. Sir, allow these as number two. You would agree with me, sir, that with the greater and greater efficiency being achieved in GST implementation, there is very little chance of adjusting one company's profits with another company's losses, or somebody taking over an SME unit because of its losses. A person makes investments in a manufacturing company to take over something which is not being run efficiently. My humble submission is, sir, that the concept that businessmen are always doing things for various reasons needs to change. There will still be 5% of the transactions will be such which may be questionable. But for that purpose, let us not put to penalty 95%, because then we are losing an economic purpose. So today, as per PhD Chambers research, the efficiency utilization in SME units is only about 60% of the units which are running well after COVID. Out of the 40%, 20% deserve both input of finance and change of management. And 20%, they have good management, but they are short of money. The extension of the credit scheme by the government will help in the credit availability. But under section 79 or under section 72A, 72A applies only to industrial undertakings. What happens to services undertakings?
Karanjit, thank you. You've been very
No,
kind.
sir, it's a conceptual point, because luckily
Yes,
as you
I think you put it
of tax policy, I'm
Right.
sure this will.
right. You
this is a
put it
broader
nicely. He's noted it. Thank you.
कभी
We
captive audience का फायदा उठा लेते हैं.
Good evening, Raman sir.
I will just 1 second mention that Karanji is a past president of the chamber and thus a very respected elder. And Karanji, आपकी बात चोपड़ा साहब भी समझते हैं, अनिल चोपड़ा भी समझता है. We will put it in. The only little thing is, for a moment, we are into post-budget. And yes, some of what you are saying is true, and there are many aspects, and they are listening. But for instance, he touched startups. Now, there is a prescribed startups, there are other startups, and then there's technology, knowledge, and IT and other business companies. And there are so many, a myriad variety of them. So what is exempt for so-called prescribed startup, and that too in other situations. So there are so many points, but I think the time will not permit too much discussion, here for a moment. You wanted to say something,
Yes,
sir? Is it direct, indirect? tax?
Direct, sir, only
Yeah, then
1
Mr.
minute.
Chopra will. Yeah.
to Raman sir. Section 142 2A of income taxes recently amended, where inventory valuation can be done by a cost accountant. So I would like to thank CBDT for this, for cost accountant lobby. And so can you say, sir, for 1 minute, or in certain specific cases?
So this request had been coming since maybe 10 years now.
We have taken representations.
This was coming since 10 years. During our budget discussions, there was some hesitation on this. I can admit that there was some hesitation on this, primarily that the sectors being mandatorily required to maintain cost accounting are very few. They are not very vast, but still there are sectors which require specific cost accountant valuations to be maintained. So we brought income tax on board on that, and we've amended the act to provide for wherever such inventory valuation is available, cost valuation is available, that should be provided to the department. So it has helped you, and it is a positive change because it will permanent deferment of lower valuation of inventory will be taken care of in the income tax accounts, and it is a revenue positive measure. And if it is liked by the other side also, as they
Right,
say,
sir.
it is the other side. So I'm
Sir, it will definitely help the department as well. We are partner in nation.
absolutely.
Thank you so much.
Maybe anyone from indirect tax? Direct tax only?
Direct tax, I have one question.
Direct tax?
Indirect he would
Just,
say,
just
to
anyone
for
from
the other
indirect tax?
side also. Mabel, आप पूछ लो.
अच्छा, एक क्वेश्चन मैं पूछ लेता हूँ. Lima ma'am, there's one retrospective amendment from January 1, 1995. Just to apprise those who are listening direct tax, one change in custom retrospectively made applicable from January 1, 1995. Section 9A, 9C of Custom Tariff Act. We are trying to understand the rationale of this retrospective amendment, that too from January 1, 1995, and what would be implication of this on the trade, industry and commerce?
I think Mr. Saurav was just asking me that. Actually, if you look at the anti-dumping, I mean, which is now known as trade remedies, if you look at, we have borrowed the provisions from the GATT rules, WTO provisions. So if you go through the provisions, our structure is also identically framed according to that. So what was envisaged was an appeal against the determination and review by DG TR, who earlier used to be known as DGAD. But what had happened is, I think recently of late, there's been a spate of litigation where instead of tribunal going into the factual aspects of the findings by the DGTR, they have been, I mean, sort of passing orders against the decision of the government, which was never the intention, because when the government takes a decision, it is a policy decision. So it is no longer a fact finding. So there have been cases where they have said that revenue should give a hearing and then decide. But we have been clearly stating before the courts and various forums, but the proceedings before the DGTR, that is Director General of Trade Remedies, is a quasi-judicial process. So that's how he hears the trade, the exporters, and then determines the margin of dumping or injury. But when it comes to revenue, it comes as a recommendation, a finding. It is for revenue to accept the finding and notify it, or not to accept it, which is a legislative function. So that is why we tried to create this changes, and we brought it from 1/1/1995, because the anti-dumping rules have been notified in 1995, to make it amply clear what was the intent of the government. And this flows, I think if you look at the WTO anti-dumping agreement, they will also throw a light on what was also the intent and the practice in all countries across the world. So that is the rationale.
Yeah, thank you, sir. So I have two questions on 54 and 54F amendment. First question is this the combined limit of 10 CR or is it like 54, we have 10 crore exemption limit, and 54F, it's a 10 crore exemption limit?
तक क्या थी मैम? आपको पता होना चाहिए अभी तक कैसे था, अभी तक सेक्शन कैसे ऑपरेट करता था?
So what he's saying is these are separate sections.
That's right.
Take them like that. Yeah, second
We've
question
not
is
changed
please.
anything.
Yeah.
We've not changed
Right.
anything.
And second question is, because 54F talks about investment of the net consideration. So technically it will always be less than 10 because
Hanji,
you do a proportionate. So
absolutely.
it is, I mean, there is theoretical limit. of
Hanji,
10.
intent.
The deduction available will be lesser than that,
Intended so.
Thank you. Thank you.
एक क्वेश्चन लेना है.
हाँ, sure.
I don't know, Raman ji, this is what the vibration I heard from direct tax. But I'm a person from indirect tax. So let me pose this question to you. 43B may now, we have to follow by default 45 days from MSME Act.
Absolutely.
If not there, then IT Act talks about 15 days. 15 दिन में payment करना पड़ेगा, अब ना वो
Without contract.
without contract,
Without
without
contract.
contract. Let me stand corrected.
Absolutely.
अब मैंने पेमेंट नहीं किया, मान लीजिए मैंने पेमेंट नहीं किया और मुझे डिडक्शन नहीं मिलेगा.
हाँ जी.
मैं एक एग्जांपल क्रिएट करता हूँ, इसके फ्लिप साइड बताता हूँ सर. आपने अच्छा किया है, आपने एक प्रोविजन तो अच्छा किया है कि एमएसएमई को जो पैसा नहीं आता तो वो अभी दिखाएगा 15 दिन में दे दे, वरना तुझे डिडक्शन नहीं मिलेगा. अच्छी बात है. प्रॉब्लम अब कहाँ आने वाली है? मान लीजिए एक सप्लाई चेन में 4-5 एमएसएमई आ गए और हमें गवर्नमेंट कॉन्ट्रैक्ट मिला. मेरी 20 लाख रुपए की प्रॉफिट है, कुल 20 लाख रुपए की प्रॉफिट है. अब मैंने 1.5 करोड़ का मान लीजिए मैंने प्रोक्योर किया है अपने सप्लायर से जो माइक्रो एंड स्मॉल है. मैं 15 दिन में पेमेंट नहीं कर पाया, 31 मार्च मुझे डिडक्शन नहीं मिलेगा. जिस साल मैं दूंगा उस साल मुझे डिडक्शन मिलेगा, उस साल बेनिफिट मिलेगी. नेक्स्ट ईयर में भी मान लेता हूँ मेरी 20 लाख रुपए की प्रॉफिट है. आप मुझे जब इसकी बेनिफिट देंगे तो क्या होगा, मेरे पास कैरी फॉरवर्ड लॉसेस बन जाएंगे और इसको कवर करने के लिए हो सकता है 5, 6, 7 साल मुझे लग जाएंगे. पहला जो फ्लिप साइड जो मुझे लोगों ने बताया. दूसरा लोगों ने बताया अगर ये कंडीशन रहेगी, ठीक है, 43B जैसा बैकग्राउंड है. 1984 में आईटीसी ने एक्साइज का पेमेंट नहीं किया था और उनने उसका डिडक्शन लेने के लिए, वो बेनिफिट ड्रॉ करने के लिए, तो 43B का जो जन्म हुआ था कि आप ड्यूटीज एंड टैक्सेस को पे कर दो. धीमे धीमे पीएफ आ गया, ईएसआई आ गया, ये सारे लोग आते गए और 43B में इन करते गए. अब 43B में हमने ये डाल दिया. अच्छा किया कि एमएसएमई को पेमेंट मिल जाएगा. बट अब प्रॉब्लम क्या आएगी, अब जो भी आज की डेट में परचेज करते हैं ना, वो एमएसएमई का सर्टिफिकेट मांगते हैं कि आप एमएसएमई रजिस्टर्ड हो या नहीं हो. अब ये प्रोविजन देख के वो डरने लगेंगे. मैं फ्लिप साइड बता रहा हूँ, पॉजिटिव भी है. वो अब एमएसएमई से लेने ही नहीं चाहेंगे, बोलेंगे ये 15 दिन में आके फिर मेरे सर पे बैठ जाएगा. और जो मैंने आपको कैरी फॉरवर्ड लॉसेस की बात बताई वो भी क्वाइट एविडेंट है. अब एमएसएमई दूसरी एमएसएमई में भी फॉल्ट करेगा तो प्रोविजन एप्लीकेबल है. तो यानी एक ही सप्लाई चेन में 4 एमएसएमई है तो चारों को प्रॉब्लम आने वाली है. अब मैं जस्ट ये समझना चाह रहा हूँ, ठीक है आपने एमएसएमई को बचाने की कोशिश की है, लेकिन ये फ्लिप साइड जो दिख रही है, जो लोगों ने डिस्कस की मेरे से, मैंने आपके सामने रखी है. इफ यू कैन जस्ट थ्रो सम लाइट कि इसका सॉल्यूशन कैसे निकलने वाला है.
सोल्यूशन आप भी जानते हैं कि डायरेक्ट मेरे पास नहीं है. आप भी जानते हैं, we worked with the line ministry and the MSME sector, and this was a strong recommendation in the pre-budget discussions. This was a strong recommendation in the pre-budget discussions. We worked on that discussions and we brought in the amendment. Again, if there is a problem in the actual functioning of the provision, tax law is always a dynamic, progressive development law. As and when any problem occurs, we have stepped forth and made consequential amendments. Normally, prospectively, assessee के benefit के लिए हम retrospect में भी चले जाते हैं. इस बार भी आप देखें कि जो हमने cooperatives का किया है, de facto it is a retrospective thing. De facto, it is a prospective thing. It is brought on the statute from this date only, पर उनको allow कर दिया 155 में जाने के लिए. 10,000 करोड़ का impact है. So many cooperatives are impacted. वो payment कर चुके थे farmers को और उनके पास अब वो expenditure को की tax liability को discharge करने के पैसे भी नहीं थे. The department has stepped in despite a Supreme Court judgment in our favor.
Wonderful.
So that is the position the department is in. आप जो problem raise कर रहे हैं, देखिए, once procedures or passing of money from A to B become smooth, आजकल सब digital payment आ रहे हैं. That concept of delay may be government sector में थोड़ा सा है. When once the payment is with an interface with the government sector, there is a delay, but normally the processes are getting smoother.
सर मैं इंटरव्यू नहीं करना चाह रहा था बट मैं आपको बताना चाह रहा था प्राइवेट से
Sir.
पेमेंट तो आज एक मिनट लो
सर
अच्छा
एक बस सौरभ का लास्ट क्वेश्चन ले ले इनडायरेक्ट पे
एक
लास्ट
एक सेकंड ले लूं एक सेकंड देखिए मुझे वैसे मैं डायरेक्ट टैक्स पे बोलता नहीं आपको मालूम है बट मुझे लगा ये हमारे ही चेंबर में एक बंदे ने रेज किया प्राइवेट से पेमेंट तो आ जाता है सर प्रॉब्लम आती है गवर्नमेंट से नहीं आता
मैंने भी ये बोला
और वहां दिक्कत आएगी बट नेवर सौरभ लास्ट
सर तो जो हम देंगे ना सर को पोस्ट बजट उसमें हम लिख देंगे
Ma'am, this is regarding this reinstatement of time limit for disposal of cases by settlement commission under customs. So this 9 months time limit, if this is expired, I mean adjudication proceedings will continue. Now we have seen cases before 2015 that it is upon the assessee to justify that, you know, there is no delay on the part of assessee. So do you feel these disputes will again crop up after this amendment?
No, I don't think so. In fact, I think this was a demand from the industry itself that you have 32F in central excise, but this is missing in customs. So I'm sure if the assessees did not see value, maybe one odd examples would be there where you had not a pleasant experience. But it was a request from the industry itself that we need this so that the cases get decided at the earliest. The time limit needs to be put in so that the settlement commission is also bound to dispose of the cases.
See, we are now at the fag end. Pallavi ji, if you want to ask any question.
सर vote of thanks अभी
So vote of thanks के लिए जरूर I will invite Pallavi ji, but before that, let me request Chopra ji for giving memento and green plan from our side to Raman ji, please.
Request Mr. Bimal.
Green plan from our side. अबे करीब आइए फोटो आएगा फिर आपका ना पल्लवी जी आपके ऊपर
Thank you, Bimal sir. Thank you, Anil sir. So I would like to take this opportunity to thank Lima ma'am and to thank Raman sir to be with us here today. You know, we all read this budget and we never know the thought behind, you know, the amount of work and the amount of thought that's gone into every amendment. Don't know about indirect, maybe Saurabh can tell, but on the direct tax side, there were 122 amendments, big and small. So while we've discussed a few, you know, there's a lot more that's gone into creating this budget. And I was saying to someone else earlier that to me, this budget shows tax certainty. You know, a lot of people wanted tax certainty and every year there were big boom proposals. So thank you, sir, for ensuring tax certainty. And thank you, ma'am, for putting in all the work, even though you said that it's not showing, but I'm sure that there's a lot. Thank you so much for being here with us today. And thank you so much for all the work. Thank you.
All are requested for coming for a high to this.